Back with First Trades, let's get into conversation with Nilesh Jain, Head of Derivatives and Technical Research at Centrum Broking. Nilesh, hi morning, and thanks so much for joining us on the show. The market seems to be consolidating once again. We're very close to that 25,000 mark. In fact, it looks like we may breach that on the lower end. A 0.3% cut is what we're seeing on the Nifty today. Nilesh, any visibility on the near-term bottom that you're spotting for the market right now?
Very good morning to you. Today's move is more sort of a sluggish and looks like we may see a follow-up on the lower side. Reason being, Nifty has breached its important support mark of 25,100, which was in fact defended in yesterday's trade. Now, today it is breaking below its 50-day moving average. It was already trading below its 21 DMA. Now 50 DMA is getting breached today. Move below 25,000 will be considered as a structural breakdown. Then we are likely to witness unwinding of the position on the put side. So that will add further selling pressure in the Nifty index specifically. So on the lower side, from intraday point of view, it is important for the Nifty to close about 25,000 for any possibility of a short covering move on the upside. But as of now, it looks like it is precariously poised, and we may see going forward a breakdown, and Nifty may test the levels of 24,800 as well. Reason being, Bank Nifty, which is underperforming today on the back of downtick that we have seen in the Axis Bank. So structure in the Bank Nifty looks slightly on a negative side, and 56,200, 56,000 kind of levels we might see going forward. So on index front, looks like a sort of a negative structure from a very short-term perspective. So the focus should be on stocks rather than on index.
Right, and Nilesh, focus on stocks. That's exactly what I wanted to ask you. Amid a beaten down market like today, any stocks that you're liking at the moment where you could think those stocks could prove to be safer relatively in the near term?
Right. So first of all, we are focusing on long ideas as of now because stock specific, a lot of a good attraction can be seen. In fact, broader markets are outperforming today. So first of all, delivery, this particular counter is looking very attractive. If you just pull up last 3-4 months chart, you can clearly see the stock after forming a good bottom near about 240 has started forming a high top and high bottom formation, and also given a good breakout from his rounding bottom formation as well. So structure for delivery looks strong, and on the upside we may see a further momentum towards 445. So that's the immediate target that we are keeping an eye on, and stop loss can be placed at 425. On the other hand, NBFC space, specifically housing finance space, is also looking positive. So within that space, LIC housing finance is something that we are liking. Today, it has given a good multi-month breakout. It was consolidating since almost like 4 to 6 months now. So looking at today's breakout with good derivative data, looks like we may see a follow-up move in LIC housing finance as well. And on the upside, the target would be somewhere around 661. Stop loss can be placed at 632.
Right. Okay. Let's try and analyze what is it that we can expect from Reliance Industries.